Good morning, everybody. Happy Columbus Day on probably what will be a snoozy day. You never know. This is Andrew Giovinazzi, Chief Operating Officer of OptionPit.com, welcoming you to the morning volatility report. Let's get to the markets. Mark's blog, excuse me, woo. Buying calls at ExxonMobil. I don't know, I saw oil up a little bit earlier today. Exxon's down a little bit, but it seems like we still have a bit of a trend up in oil prices. Congress looks like they might pass the ban on oil exports. We'll see what that does. But it feels like it's going to loosen things up a little bit. The big story really of the week, also there's a little bit of pressure on the Fed from other central bankers just to get it over and raise rates already. But it's not stopping, treasuries from just making a run. We'll just use the TLT as the easy proxy. It seems that it's kind of been, battening around here, sort of in between this area. A little bit here. I don't know if we're going to see that again, but we've had a big, a bit of a pullback in here. Volatility is starting to get, I would say, a little cheap again. It's kind of the off and on thing. One Fed governor says one thing, another says another, and it's all it does is been adding confusion to the marketplace. However, it does look like sometime within the next 6 months they're going to do something. All right, big deal. Now, back on our front, excuse me. We watch volatility here. VIX up a half, but we also, that's kind of the classic, let's get a tick chart here. 5-day tick chart. This is sort of the classic, this is something we haven't seen in a while. All week long, volatility drops. Whoa, excuse me. Right? They sell it off into the end on no activity, and then we have the weekend effect pushing VIX back up. Right? So all of a sudden, once the rally kind of held, liquidity providers rolled everything forward and just crushed the wall for the weekend. And now we're kind of back to this level here. Okay, which I think is about, we're just going to call the 17 level, let's just call it fair, somewhat fair. If we take a look here again, this is our, let's see, we had third try, crack at the apple, trying to get back kind of into the is everything okay mode. We'll start to look at earnings and banks today. We'll start going through some earnings plays, see if there's anything. It is earnings season. Some of the oils are giving back a little bit, but I think that it feels like it's only going to be temporary, really. From a vol point of view, okay, you got this, right? 10-day volatility on average is still like 21%. So there was huge moves in here still. The question is, are we still going to get them? With China feeling, at least market-wise, it looks like on the recovery. It doesn't look like we're going to get those same huge moves, right? Because we just haven't seen it yet, right? If you look at a product like the FXI, China took a week off, and it's nowhere near where it was. This is kind of the bubbly frothy, and it's still not a cheap market, but it's not selling off anymore either. All that stuff is going to kill our volatility slowly but surely. If you do see the VIX trade below 17 today, they're actually starting to take down the volatility pretty substantially. We did look at some ideas for that. I don't think anything's changed. I would look at the 20 handle in VXX as a 1-week target. Things of that nature. Also, to see if the financials can kind of kick it back into gear, if the Fed indeed is going to do something and all the other central bankers can have sway over them. Other than that, it is a quiet Columbus Day. I believe the bond market overall is closed today, so it'll be a quiet one. Other than that, I will see you all in the chat room momentarily. Bye bye.